Good evening, friends. The market has chosen to move up and up only, and I think this week turn out to be a very good week for the investors. Fortunately, this month April has really created good wealth for our PMS investors also. But today we are going to discuss about the future trend. And the very interesting data that I'm going to discuss today in the future trend, there is a general belief that if the company form a part of an index, normally that company should do well. And the company that goes out of the index, it should perform badly. Does it really holds true? That's all the perception that we have. Another interesting data that I'm going to discuss in front of with you people is that what impact bad monsoon have on the GDP growth. And there are more data. So before that, I just disclaimer that this webinar is only for an education purpose. Past performance is no indicator of future returns, and investment in securities market are subject to market risk. Please consult your financial advisor before buying or selling any stock. Now coming to the topic that I was saying, so let me not go. Let me directly take you through the slide only. So how company performs post inclusion or exclusion from Nifty 50, and this is just to give an idea. Okay, what happens? So what I did actually, we divided into two parts. First, we look at the company those got included in the Nifty 50 and how they perform post they becoming a part of the Nifty 50. Now, there could be possible that some company they must have entered the Nifty 50 companies and must have exited before, in next couple of years, and it may not be the part of Nifty 50 as of today. So what we have done, we have put an asterisk behind that, and we have taken the price of that period to make comparison easy. We again did not only this company how it performed, but we also look at how Nifty 50 itself performed post this company into, so that after becoming a part of Nifty 50, has it able to outperform the Nifty 50 itself or not? Now, if you remember, Eicher Motors became a part of Nifty 50 in 2016. Am I right? And that time people used to say, instead of buying Royal Enfield, had you bought the shares of Eicher Motor, today you would have been able to buy Mercedes Benz. And that was the thing. Why? Because that time the company was doing extremely well. And when we 8 years down the line, that is to April 2016, 2014, the script did move up by 140%. It's not that it has not moved up, okay? But what happened is that the Nifty gained by 192%. In other words, the negative alpha. What surprised me, is some of the companies like HDFC Life, basically, which become a part of Nifty 50 -5. The script has actually, after becoming a part of Nifty 50, it has not given returns only. And if you see, there are more reds than the green that you can see. Divi's Lab, another classical example, which is the most favorite stocks once upon a time. We had also recommended Divi's Lab as a stock of the month, and we exited at about 60% gain or so, and so and so. So, and this is not the complete list, there's one more list, next page. Okay, and company like Adani Enterprises, September 2022, it became a part of the Nifty 50. The script from that level is down by -11%, while the market is up by 32%. It's a negative alpha of 42%. LTM, Mindtree, Aurobindo Pharma, now what you see as the asterisk, that means these companies are no longer part of Nifty 50. They were part of Nifty 50 when they got entered, and then they exited also. Okay, and what happens to that? And again, I'll take you to the next slide. After they exited the Nifty 50, what happens to Indus Tower, what happened to Aurobindo Pharma, what happened to India Bulls, and so on and so forth. Why? Because they exited that. So if you look at it, this is the way the list looks. Doesn't look very exciting, like UPL -12% and so on and so forth. Like Shriram Finance, which got entered on 20th March, is up by 3% versus the Nifty. This is just very recent entry. that happened in this one. But that entry that may happen in 13 July 2023, you can see minus 2% versus the Nifty gain LTM entry, this one. Now, if you go back to the company that were excluded from the Nifty 50, what happens to them? PNB definitely, but if you look at the bail after exiting, it has performed better than what the Nifty 50 has performed. But Vodafone Idea, complete disaster. Basically, after it existed, it further went down. So that was a good call that it went down, and with this one. But if you look at some of the company like Tata Power, 462% up after exiting the Nifty 50. This one, Ambuja Cement 163%, so and so forth. And then there is a company like Vedanta 248%, GAIL 138%, IOCL, Vedanta, this company Vedanta came and again went out, and so on and so forth. So if you look at the summary of this, what does it mean is that the company got included. 58% of the company basically they gave a positive returns after becoming a what we call part of Nifty 50. But only 29% could outperform. While on the other hand, that 82% of the company basically, if you look at it, gave positive returns to the investors, those who exit, okay, and 41% outperform. So basically, the company those got excluded performed better as compared to the company that got included. So sometimes, we all, of course, now this is, I have taken till 2016, so it's a little long term. So there could be possibility that in the short run, when you get entered from a part of the Nifty 50, there could be some buying that could happen, but does not guarantee that this company will be able to create a long-term wealth. If you go back to one of my the future trend webinar, where I discuss about how Nifty 50 and Nifty 50 equal index have performed, and if you remember at that point of time, I did mention that Nifty 50 equal index performed better as compared to Nifty 50. And someone has asked me if that is so, how do we get benefit? And I suggested, in case if you wish to go for index funds, please go for Nifty 50 equal index funds as compared to Nifty 50 normal funds. That's how you can generate little more alpha over Nifty 50. So how does one explain this anomaly? Because normally when the company get included a part of Nifty 50, those who are indexed tracking funds, they will be buying more of that that company. Am I right? People will buy. So the more demand logically should result into better prices and better outperformance. Why is that not happening then in the real life? So sometimes our assumptions may not hold to it. It's counterintuitive. Why? Because what happens, the company when it enters the list, it enters when the things are going extremely good for that company. Then only it can become a part of Nifty 50. If you look at the how company can be in part of Nifty 50 is a function of the liquidity, the market cap, and so on and so forth. So normally the company when it enters the Nifty 50 index, it would have done extremely well in last 3 to 4 years. And the company that get excluded from the Nifty 50 is those companies which would have performed very poorly in last 3-4 years. So what happens when it's like a recency bias, and that's a classical example that happened with the Nifty 50 constituents. In fact, I wanted to, of course, I need to do a lot of data mining now. In fact, I also wanted to understand what is driving Nifty 50. Is it the company that have been more than 10 years old, which is part of Nifty 50, or the company that are entered recently, or maybe last 5 years and so on and so forth? Because I just want to understand, is the Nifty driven by the old horses or by the new horses? Am I right? So don't make your investment strategy based on, the company index mein aa gaya, let me go and buy that company because more people will buy. Just looks logical, but doesn't turn out to be logical. Am I right? Simple reason, you are picking the company most probably at the top of the price, and due to that only 29% outperform, only 29% outperform, 71% underperform. So a very simple this that that's again recency bias, and I think that's where the index constituents also need to think about it. How do we basically make this model so robust that logically those companies? So if you ask me, the things have gone so worse. Why do we want to put that company in the exclude? Might as well continue because जो damage होना था वो तो हो चुका है. And Tata Power is a classical example. When it exited, the things were not going right. And Adani Enterprise came at the peak of the cycle, and the rest is history. Today's second trend that I'm going to discuss about that how Indian IT software companies give a lot of employment to the graduates, the IITs and the engineerings and so on and so forth. That also helps the real estate sector and the consumer durable sector. Why? Because see, normally when IT companies, normally they get good salary, IT engineers, number one. Number two, that spur the consumption cycle in the economy. If you look at some of the places like Bangalore, Chennai, Hyderabad, Pune, okay, these are the places where the real estate has done reasonably well, purely because of the boom in the IT sector. More people, more demand, and due to that even the local economy does extremely well. So if you look at this data, these IT companies have been on a continuous, adding more number of employees in their payroll. And of course, I'm not taking subcontractor because that will further, but I'm only purely looking at the company employees, am I right? And if you look at this, the TCS increased from 4.1 to 6.1, continuous increase. This is 2.4 to 3.4. HCL take 1.5 to 2.3 till FY 2000, 1.9 to 2.6. To retain employee was a clear-cut challenge. And that's why I said, हवा का रुख बदलने को time नहीं लगता है. And what is a remedy for the good time is good time itself. Why? Because that's what it happened. And this is exactly what has happened. When the things becoming so much this one, somewhere the things started going, and the industry started facing little headwinds, and we see these numbers coming down. My worry is this, okay? My worry is that if I have to come in front of you, same time next year, that is FY 2025 data would be there, this number would be higher than FY 2025 number. In other words, there could be more degrowth in the number of employees in the IT sector. Now, that's not a very good news for the consumer durable companies. That's not a very good news for the consumption basket, for the real estate and so on and so forth. And look at the degrowth. Infosys 8% decline, Wipro 9% decline, TCS and HCL Tech has been reasonably this one. Of course, if you look at what we call TCS, it employs 6.1 lakh or 6 lakh people for the FY 2024. While if you combine Infosys and HCL Tech, they are still less than what Infosys. And of course, HCL Tech number is for December. The company is about to declare the numbers today, so I don't have the data which has not been updated. If you look at the CAGR, it has been quite robust, on an average 7%, despite the decline that we have seen in FY 2024. The best has been HCL Tech, which has added 11%. So what I'm trying to predict here, the number of people in FY 2025 with IT companies will be lower than what they are in FY 2024. Why am I making a statement? The reason I'm making a statement, if you go through this con call of each and every IT software companies, they are cautious. None of the IT software companies have said that people are spending money. They are saying the clients are spending money only on those projects which can give immediate benefit on ROI. Something which they can defer, they want to preserve the money with them. Am I right? So don't expect good top line growth, and because of that, the manpower requirement. Number one. Number two, I think each and every IT software companies will adopt artificial intelligence. What does this mean? That means that your need for hiring an software engineer will come down. And due to that, I believe, and of course I can 100% go wrong, that maybe this could be the peak number that we'd have seen for foreseeable future in terms of number of employees. Why? Because artificial intelligence can reduce the number of people. So I'm not an expert in IT, and those who are from IT, maybe they can correct me once we open the floor for question answer. My sense is that if the work that has been done by 20 software engineers, the same work in next 1 year down the line can be done by only 4 people. 4 people. 4 can become 5, 4 would be 6. That we can debate and argue, but it's not going to be 10. In fact, it will be less than 10. That's what my understanding, because whatever reading I have done, whatever understanding I have gathered, that's what my this one is that. And if that's true, that's the case, I think you could see this. And this benefit, of course, this company will pass on to the clients, and clients' need would also undergo a tremendous change, because every company, the client would like to then adopt for their system and software in the process AI. In fact, yesterday, TCS CEO made a statement that BPO will shrink, the industry will shrink in next 12 months, purely because what can be done by AI would be much better job as compared to the human employee. So I think that's kind of a drastic change, we can see that. So again, this number of 6 lakhs with TCS, 3.2 lakhs with Infosys, 2.2 lakhs of HCL, this data as of December, and Wipro 2.3 lakhs. Most probably this number would be quite less for FY 2025. We all know that SkyMet as well as IMD came out with a very good set of monsoon prediction, and where we need a very good monsoon. Otherwise, there could be a water crisis in the country. And fortunately, officially, El Nino got ended by mid of April. I think it's a neutral phase right now, and eventually it will convert into La Nina, and that we can get a very good rainfall. And that's needed, because if you look at some of the Central Water Commission came out with the data on the reservoir, and it's quite low. And some of the southern states like Karnataka, it's very, very low. It's all available in public domain, so if you Google search, you will get this data. So I don't want to spend some time. But I wanted to understand what is the correlation. If there is a good monsoon, does the economy does well? And there's a bad monsoon, does economy perform bad or not? Now again, as I was discussing about that inclusion and exclusion of Nifty 50 companies, when I look at the data looks very, very interesting. Okay, so in FY 2000, these are FY 2023, the reason I've taken financial year for the very simple reason, we have southwest monsoon and we also have a winter monsoon. Am I right? So I wanted to combine both. If you look at the FY 2023, 20% decline, and GDP growth did come down to 3.8%. Okay, but there are places, like for example, in FY 2007, the rainfall was 3.4 and GDP over 8.1. But when rainfall increased to 11.3, the GDP came down. And of course, then we seen a decline because of global financial crisis and so on and so forth. In FY 2010, 18% rainfall deficit and GDP expanded to 7.9%. So what I've realized is that, so for example, very latest data, if you look at this, 6% positive, 7% GDP, minus 6%, 7.6% GDP growth. So what does this clearly indicate is that there is a little less correlation between the rainfall and the GDP. Now again, if you ask me, logically rural income will take a beating. Because of rural income takes a beating, rural demand will take a beating, and if the rural demand takes a beating, it could have a cascading effect on the economy. But why it's not happening? The reason could be, and of course this again, I don't have a data to back it, but my understanding is that the less and less contribution of agriculture on the GDP. GDP is basically mainly driven by the services, and services, as long as the service is doing well, I think it should be fine for the GDP to grow. So I thought, since some of you people did ask us that if the good monsoon, should we expect the better growth for next financial year? The answer is no. I don't think we will. We should be less than 7% for next financial year. That is FY2. This financial year. When I say next, this financial year, we should be less than 7% GDP growth, which is lesser than FY 2024 GDP growth. Despite monsoon will be better as compared to. Again, this is a trend that we are predicting. We may go wrong, but this is what we see. Now coming back to the India, and someone asked me this question. कभी पूछा था आमिर ये सवाल? Last फ्यूचर ट्रेंड में पूछा था? Any idea? Okay, someone asked us that, people are spending less and saving more, of that kind of a question. And is India saving less? And if you look at it, the data is, I don't have data for FY 2024, so I have not used that. But if you look at the gross savings to gross domestic savings as a percent of GDP, we are fairly at the very decent numbers. Of course, we were very high, 36, 37%, but the trend is declining. And of course, this was a very bad year to compare. But if I look at it, still we have not gone back to the FY 2000, the pre-COVID period of this. But in absolute, because GDP is growing, so the gross saving is growing and is 82 lakh crore, which is not bad. But while the gross saving is going up in absolute value, okay, but if you look at the net financial asset saving, okay, I think that's a little taken a beating. What does it clearly suggest to us? And then if you look at there's a percentage of GDP also, what does it clearly suggest? That people are borrowing more than what they're saving now. If you look at yesterday, there was the highest ever money spent on the credit card. So somewhere people are spending more than they should be, borrowing more than what they, and I think that's one of the reasons why RBI came out with the guidelines saying that, please ensure that your unsecured loans are properly done the risk assessment. So should not done that. So that this data does disturb us that, are people spending more than they are supposed to spend? Somewhere, we thought that since people are investing more in mutual funds, so usse kuch, if you look at the net financial assets has come down from 17 lakh crore to 13.8. I don't know what the data would be for FY 2024, but it just gives an effort. If you look at FY 2022, this one, so there is some amount of people are saving less than the pace of growth in saving is less than the pace of borrowings, and that's the reason we are seeing little less kind of numbers coming in here. And when I look at this data, I was a little surprised. So, in calendar year 2023, India had two major events that had attracted a lot of foreign tourists into the country. And I was surprised when I look at it that number of foreign visitors, tourists, is still less than what it was there pre-COVID. Okay, so normally pre-COVID we used to get more than 1 crore foreign tourists coming into India, which declined significantly in calendar year 2020 because of COVID, and next again the COVID, it declined. And of course, there's nothing wrong with that. It did bounce back in calendar year 2022 to 6.44 lakhs, that is 64 lakhs. It further went to 92 lakhs. And remember, we had two events. One was G20, which attracted a lot of foreign tourists. And second thing, Cricket World Cup, which India lost. But a lot of foreign tourists would have come to watch and enjoy this World Cup. And yet, we are less than what it is pre-COVID. And I think on one hand, when government wants to spend tourism as a source of as a major thrust area, I think we need to do little more efforts by the government, maybe Incredible India kind of a stuff, and get more and more foreign tourists to visit India, because the fact that we had less number of foreign tourists coming in uh, pre-COVID level as compared to pre-COVID level is not something that we should be very proud about. Am I right? And I think we need that. If we don't do it, unfortunately, we will not have Cricket World Cup this year. So is the case with G20. So there need to be a sustained efforts from the government of India to do that. Even local state governments also need to spend some time to attract the foreign tourists coming in. And I don't have that bifurcation within that foreign, how many are NRIs who visited India. Probably it could be, and if I have to do net of that, the divide between foreign nationals and NRIs, most really these numbers would more accounted by the NRIs than the foreign tourists. And this is despite the fact that India has a very beautiful, complete tourist spots in the one of the best tourist spots in the world, and yet we are not able to attract. So there is something fundamentally wrong, which we need to taken care of. And I'm so sure. In fact, if my data, if my memory serves me right, Thailand get more number of tourists than the country like India. And Thailand, with the size of the Singapore seems to be getting more tourists as compared to the India. And Singapore is a city state, and yet that's what happens. So I think, and it's not a very cheap country. In fact, if you wish to spend money, it's one of the costliest place to visit actually. And yet, you see this kind of a things happening. And so I think we need more efforts. If the government does not do that, my worry is that for calendar year 2024, we will have less number of tourists than what we had in 2023. Why? Because there is no fillip coming in from the G20, which was there last year, and again the Cricket World Cup. What are the major news? And of course, let me take the World Economic Outlook by IMF. I think it's clearly stated that it has given some data which says that calendar year 2025, the world should go, advanced economy should grow at 1.8, US by 1.9, emerging market 4.2, but India should grow at 6.5, and China at 4.1. The Red Sea tension has really increased the freight cost. The decline, the canal, Suez Canal, fell by 37%. The volume, the trade volume has declined by 37%, which has been made up by Cape of Good Hope, which has gone up by 50% January. But the cost of logistic has gone up. Of course, I have not gone through all the con call, but still I have not come across someone making a comment that because of this Red Sea issue, their freight cost has gone up. So I think this would be more with the export oriented. So let's see, as the result season progresses, we'll get some more data. US economy slowed down to 1.6% in the first quarter of 2024, and it was 3.4% December quarter. The data is error. It's not FY 2024, but CY 2024. And of course, the expectation was little less. Yesterday, US market did decline because of this GDP worry. What happened to the Indian market this week? The Sensex moved up by 0.9, NIFTY by 1.2, but mid and small cap handsomely moved up by 4%. This despite some correction today happening, but overall advance decline ratio was good in the market. FPI, despite advance decline good, despite both Sensex and NIFTY closing in green, despite mid and small cap going up by 4%, FPI were the net sellers. Almost they sold 1,050 crore this week. And this number looks a little better for the very simple reason because they invested very substantially in the primary market. My sense is purely because of Vodafone Idea. That's where they must have pumped that FPI would have invested. Otherwise, this number would have looked much, much worse. They would have sold more than, had it not been Vodafone Idea IPO, this number would have gone near about 5,000 crore in just 1 week, kind of a sale. So FIS continues to be taking money out from the market. and yet market did very well. Clearly shows that how long we basically sustain this kind of. Someone is definitely buying what FIs are selling. Whether it's going into strong hands, whether it's going to weak hands, we need to wait and watch. With this, let's open the floor for question answer. If Nitin is saying if election results are not in favor of anyone, what could be the effect on market? If I got your question right, sir, are you suggesting that there will be a hung assembly in the sense no single party is able to form the government? Is that what you are suggesting? The possibility that looks little doubtful. Why? Because there are alliance already been done pre-elect. Like we have a Indie alliance that is consists of Congress and plus other regional parties, and then we have NDA, which is BJP plus the regional parties. So I don't think that it will not be in favor of one party. It will be in favor of one alliance. Okay, whether it's a Indie or whether it's a BJP plus party. So it would be there. For some reason, if BJP is not able to form the government or NDA is not able to form the government, market can correct. And if you go back to our January 2024 outlook that we talked about election, we did mention that if for some reason if BJP is not able to form the government, I think market can correct by 20% or so, and it will take about 3 to 4 months to recover that kind of a loss. Taha Nasi is saying, sir, please do webinar on power of compounding and taxation on profit. I think it's I distinctly recollect I had promised about power of compounding. Just Amit, remind me, I think, yes, I should do it. It's a very interesting topic. And, Albert Einstein has said that power of compounding is the eighth wonder of the world. And, it's a most, it's a most what we call underrated kind of a concept in the country, power of compounding. Not in the country, in the world. People do not understand because of the power of compounding for the longer period of time, over the longer period of time, 10% return and 15% return, even though it looks only 550, okay? The returns over a longer period is huge, which will decide whether you are a multi-millionaire or only millionaire kind of a stuff. I'll definitely do that. And the beauty of power compounding works, especially when it's a longer period. Am I right? Because that's where the power of compounding works very. And I think you wanted to cover about taxes, and right now there's a debate happening about whether there should be inheritance tax and so on and so forth. I think what the tax on this one, I think we should do it post-budget, post-election. Not now, depending upon who forms the government, who the finance minister. But I think power of compounding is a very interesting topic. I must do it, and I'll see how best I can basically start working on it. Nilesh sir, please say your comment on advantage of demonetization. So if you ask me, I don't see any advantage there on demonetization. Only thing that is that people made conscious of the fact that was paisa ghar pe zyada rakhne ka nahi. And don't keep too much, higher denomination notes. So when rupee 2000 note, when RBI ask for the withdrawing from that, it did not disrupt the economy the way 500 or 1000 rupees. But one good thing has happened because of demon is basically, I must tell you that more money went to the financial, more money moved to the mutual funds and so on and so forth. And that really helped Indian, so it basically helped people, those money which was lying in the cupboard or in the locker, that money started flowing into the economy, because as per the RBI own admission, that most of the money that came back to the RBI. In other words, the money which was lying, not being put to productive use, came in the official channel, because people deposit that money in the bank, and bank in turn use that money to give loans and so on and so forth. So I think that really helped in terms of, so that money which was not productive has become productive. And second thing, the people invested that money in the mutual fund, other investment instruments that also help to improve the economy and the financial savings. Sushil Singh, how can I ascertain which stock is large cap, mid cap, small cap, and micro cap? So, sir, our definition is this is our definition. The various people use various definitions. The MFI says that 1 to 100 companies in terms of market cap are large cap, 101 to 250 is mid cap, and beyond 250 they are small cap. They don't define anything as a micro cap. If you look at the BSE small cap index, the mini company which has been identified MFI as a mid cap, and the BSE 500 index would have a small cap, and so on and so forth. What we define, we will tell about that, because the definition varies from a institution to institution. What we are saying, anything above 20,000 crore is a large cap. Anything between 5 to 20,000 crore is a mid cap. Anything less than 5,000 to up to 1,000 crore is a small cap, and less than 1,000 crore is a micro cap. That's our definition, Sushil sir, and we believe this is a fair definition to define the market cap. Anshul, thank you for recommending Wabak. It's almost 3x for me. Thanks from the bottom of my heart. It is still a hold. Market was rating is very different for these stocks, so not sure when to exit. Kind regards, Anshul. Sir, I'll not. I'm very grateful, sir, that we are making 3x from this company, but not all are making the same kind of money. Why? Because people lost patience, and that's where I said patience and disciplines are two critical thing in creating wealth. So you may enter the company at the same time, and still you don't make money. Why? Because you don't run out of patience. तो वो एक तकलीफ है, am I right? And discipline नहीं रहता है. We do believe that there will be a more demand for clean water. If there is a more demand for clean water, company like Vatak Webak should do reasonably well. I will not give direct answer, but you hope you got the answer what I wish to say. So now you can apply your own judgment and do the needful. I must also tell you that I do own Vatak Wabak in my personal portfolio, and I continue to hold. Tapan, in spite of choppy market forecasted by market watchers since January end 2024, my model portfolio increased by 40% in just 2 years. It never decreased since January 1. Thanks to team. Tapan sir, I'm very, very happy, sir, that we are making money. I'm very happy that your portfolio is doing very well. Please follow our advice in a very disciplined manner. That's where sometimes we may not perform as good as we want to be. But this phase will be there. But eventually, on a block of 3 and 5 years, it has to reflect in the performance. So today I can say, I don't have a data in front of me, but I'm very confident that anyone who has been following our model portfolio for a block of 3 years, minimum 3 years, would have significantly outperformed the benchmark. Few days back, you said that GDP to market share is high, so that market trading at high valuation. Now, what is GDP to current market ratio? At that what level you expect the ratio should come down to? Vishal is asking. So, we don't have any specific numbers in our mind that, should it go down below 100? Should it go down to 95? That kind of numbers we don't have. Market to GDP ratio continues to remain very, very high, in excess of 125%. It has not come down. If you look at the China, highest ever market to GDP was 121%. Despite the economy doing extremely well for that period of time. I think that was in 2007 or 2003 or 2007. I'm not able to recollect now. So logically, we should not be combining such a rich valuations. Am I right? Now, what level, and it's also a function of what level of growth we are going to see, what kind of growth in earnings we are going to see, so and so forth. So right now, we do believe it's high, and at appropriate time, we will look at not only the absolute value of market core GDP, but we will also look at the various other parameters that should decide the kind of valuation Indian market should command. And at that point of time, so now we believe that market seems to be reasonably priced, and hence makes sense to believe that valuations are reasonable. Whether that valuation become reasonable or not, there is no guarantee of that. But right now, we do believe that valuations are rich. One of the reasons why FPIs are selling purely because they also believe that valuations are rich. There is one more thing which has started happening in the last couple of days. Some of the big cap companies are falling 8899% in a single day. Normally, that's not also a very good sign also, because that does gives an indication that कहीं ना कहीं result खराब है या news खराब है, market will hammer that company down very badly. In other words, it also shows the lack of confidence. अगर confidence होता है market में तो बोलता ठीक है चलना 2-3 दिन ठीक है, that's not to worry. The moment script falls by 8 or 9%, today one company came out with the numbers and been taken hammering of 8 or 9%. One of the most wealth creating company but came down by 9%. Yesterday we saw one bank having a very tough time in terms of holding the price and seen a decline of double digit, part of Nifty 50 companies. So I think that also shows people are not in a mood to basically have in a kind of a mood कि खराब है तो ठीक है कोई फायदा नहीं वांदा नहीं है, let's continue to hold. I think they want to just hammer it down and get out of that company. Mahindra Singh is saying, how do you handle PMS investment during market downturn, and do you employ hedging strategies to safeguard against potential losses? What is the fair return on PMS investment? How do we handle investment during market downturn? Do we take hedge? We don't hedge strategy. I'll be very honest with you. What we did, sir, Mahindra Singh, sir, we were heavily exposed into mid and small cap. What we did in our PMS, we moved to large cap, because we wanted to protect the capital of the investors, and we said that even if we are going to underperform, so be it, but we want to protect the capital. Now after moving to large cap, I must tell you we outperform the benchmark. Since we did that exercise, we outperformed the benchmark for that period. We are what is the return one should expect? Fair return. So SEBI guidelines clearly say that you cannot give any numbers to the investors, amount to a mis-selling, and which is rightly so, because no one has a clear-cut handle on how market is going to perform. What our endeavor would be that we expect Nifty 50 or BSE 500 to give a CAGR. BSE 500 is our benchmark in our PMS. Should give return of about 13 to 14% per annum CAGR over a period of 5 years. If that is so, our endeavor is to outperform that 13 to 14% CAGR, and we are very confident that we should be able to do that job. Fortunately, in the month of April, we have significantly outperformed the benchmark, but that's 1 month doesn't define anything, am I right? What does it matter is what kind of return you create over a block of 3 to 5 years, and we are very confident that in a block of 5 years, if our benchmark is going to give us 13-14% CAGR, we should significantly outperform that benchmark. So now you can make your own guesswork how much significant that number would be, and then it gives you an idea. Saju Pete saying, is the new logo on your t-shirt? No. Sorry, sir. This is not Marcus Fojo logo. This is Tommy Hilfiger logo, sir. It says TH, so Tommy Hilfiger. It is not a new logo of Marcus Fojo. Neeraj, good evening. Sunil, you seem to be destroyer. Don't get me wrong. You always succeed in breaking your excellence record by upscaling the fantabulous of your presentation. My query is that if IT software companies are cautious about increasing MPC by harnessing the power of AI, then would it be wise to invest in these companies in all dips? Thanks for picking up my query to respond. So, sir, at first I thought I'm a destroyer. So I thought you are saying in a negative sense, but it's a compliment that you are giving, Neeraj. Thanks a lot, sir. So, in front of my yesterday, when I did some presentation to our PMS customer, I did mention that short term looks a little challenging for the IT companies, but medium to long term looks extremely good. For some reason, and we do own nearby, and I also mentioned in my presentation with front of our PMS customers that what percentage of IT exposure we have in our PMS, and what is that holding that we have, how much it is up from the purchase price of ours. So, having said that, we did exit from 2 IT software companies in month of April. Now, we do believe that short term looks little challenging because budgets are not there, which needs to be there for the IT software companies. But there are 2 things which is going to work out very well for the first thing is that the employee cost would come down logically because of. And did someone mention about? I asked about will 20 people will become 10 or will it become 4 to 5? हमें किसी ने बोला है someone from IT software service that do they subscribe to this kind of a prediction that I made? If yes, just will pick up that question, please. So our sense is that requirement for so there are 2 things. What happened to the IT software Indian IT companies when digital came, when cloud came in, it offered an opportunity, business opportunity for our companies. Something similar manner, this AI will also offer an opportunity for our IT software companies, and that should open up new avenues for them. At the same time, if your employee costs are going to go down, you should, because if you look at any IT software companies, the employee costs are the biggest. In our case also, in our company also, employee costs are the major portion of our expenses. If that comes down, you do get a benefit of the lower employee cost. So yes, short term looks little challenging at this point of time, but I think medium to long term looks extremely good. Number 1. Number 2, for some reason, if the market sentiment has to go down, okay, the people will go move towards safety, and IT sector basically fits into that picture, the bill. Why? Good corporate governance, no borrowings. On the contrary, they're cash rich. They do pay every now and then, not only the higher special dividend plus special dividend, but they do announce buybacks and so on and so forth. And in terms of valuation, they are trading at a very reasonable valuation, and that sector can absorb big money also. If the market sentiments go a little safe, people will move towards as a safe sector to the IT software. अरे अमिल किसी has someone said from the IT software कि कितने आदमी होने वाले क्या कितने 20 है सॉफ्टवेयर इंजीनियर कितने कम हो गए कि हो गए तो कितने कम हो गए? Has someone mentioned that?
Not yet.
Not yet. Okay. Okay, sir, please advise about investing in BSE Value Enhanced Index Fund. Sir, I have not looked at that fund index, so I will not be able to comment on that. But I think our mutual fund section should be taking care of that. I don't know, but I'll look at it, sir. BSE Value, just मुझे image भिजवा दो. What I'll do, sir, I'll try to pick up. I'll just study just what is BSE Value Enhanced Index. I don't have much of an idea, sir. So I'll be very honest with you. I don't invest in mutual fund. Okay, because I know what I can do with my money, so I don't invest in mutual fund. So, in fact, I did invest. I'll be very honest with you. When we were, we started, Markets was started that what we call mutual fund investment through Markets Mojo, and our tech team was testing, so they came to me and said, please invest. And the company said, okay, all employees, they will get 1,000 rupees to invest through the Markets Mojo platform, and we refund that 1,000 rupees. So I did invest 1,000 rupees. I think I invested in IT index or Nasdaq 100 or either of that actually, or maybe in both. I'm just forgetting 1,000 rupees each kind of stuff. So that's my last investment in the mutual fund. You look at the amount that I invested, 1,000 rupees each. So 2,000 rupiah doesn't. It's a decimal in my portfolio. But anyway, that's what I did actually. Varun, BPO industry struggling being in the IT industry from last 15 years. I can bet that it's not new hire, but even 40 plus mid-managers are at high risk as employee count reduce. You are right, sir, Varun, sir. And I think and that's what TCS CEO also made yesterday comment. I think we are going to be in a very, so those going to be, see, remember, the artificial intelligence is going to change a lot of industries' dynamics. Whether it's the way how you invest. There is something called large language module, and then there's a small language module that will sit on your mobile phones and so on and so forth, SLME. and LMM. Those who understand this will understand what I'm referring to. I think it will get imbibed in our daily life. And the way mobile phones took away the need for camera at home, taken away need to have a radio and other stuff. Well, because everything is in there in the mobile, am I right? You don't need anything. Same way, artificial intelligence is going to take away a lot of other things. You will see efficiency level going up 3x and 4x because of artificial intelligence. A work that you need to take maybe 1 hour will get reduced to 10 minutes purely because of artificial intelligence, because it will able to predict. So today, if you watch Netflix, does have an artificial intelligence because it knows what kind of person you are. It analyzes and it gives you suggestion on that based on that. Okay, it will further get refined, so on and so forth, and that's the thing. So my sense is that you are right, absolutely. Many people will be around, and those who do not adopt technology, they'll be at the loss. Okay, I would not be surprised even you will see, and the biggest advantage that will happen to the humankind because of artificial intelligence is a medical. The amount of artificial intelligence is able to, predict, instead of, you get cured, it will basically predict that what is the probability of you falling into. So today, okay, those who have a mobile, Apple phone, I don't know other phone. So when you, have an Apple phone, it has some amount of an artificial intelligence into it. So I'll tell you what it is basically. You go to all health data, and it says, what is a walking speed. It tells you walking step length, and based on that, it can predict what is the chances of you falling, or how soon or it also tells you whether your walking is symmetric or walk asymmetric. They call it. If it is too much estimate, then there is these are the things the artificial intelligence they are putting in your mobile phone to predict, and then if you know in advance that this could happen to me, you might as well take that precautions so that you don't run into that kind of an health. So health is going to be a very, very big advantage. But I must tell you, there are two things which is going to happen. There will not be any kind of a labor cost advantage because of the things which are more labor intensive will get replaced by the artificial intelligence. In fact, there are many places you will see robots working. Surgery में तो हो गया, robot surgery होती है, am I right? And something this will happen in manufacturing, that will happen in many other things, which would be taken care by that. So I think no longer cheap labor is an advantage, and the many industries will use artificial intelligence to reduce their cost, reduce their processes, reduce the raw material cost to improve and bring in the efficiency, and that the benefit will come down to the largest section of society, and due to that there could be reduction in the cost also, and inflation, which seems to be a problem now, can come down purely because of the efficiency improving. GK Bhatt, dear sir, do aggressive portfolio to any extent resemble PMS portfolio? No sir. So in our aggressive portfolio, if you look at it, there are caps have been defined, that how much we'll invest in one particular sector, how much we will invest maximum in mid cap, maximum in small cap, and so on and so forth. In our sole portfolio, there are no restriction only. I can invest in 100% one sector also. Then there are number of stocks been defined in the aggressive portfolio, am I right? Which is very limited. Here the number of stocks are a little different. Number 3, market cap allocation. In power, we can go only up to 20% small cap, but in Sol, we can go up to 100% small cap also, which is not possible in the aggressive portfolio. In other words, it may not resemble the aggressive portfolio. Johnson is saying, why is the solar panel sector so volatile, hitting upper and lower circuit on daily basis? that may be purely because of speculation. There is no reason why companies should, and I don't know which company you are referring to also. But solar panel industry is, while the demand outlook is so strong, there is also competition there, and that's why you need to be in a right kind of. I will be very uncomfortable if a company only hits upper circuit, lower circuit. I'll never invest in that company because I can lose my capital very quickly. So in order to make money, I may go for this kind of company, but I would not be very comfortable. I wouldn't really, I don't know which company you are referring to, sir, and I don't have any exposure to any solar panel company in our PMS also as we speak. Sundar Raju, sir, in update of the Indian markets, it's noted that mid and small caps got gone up by 4%. Whether it shows going forward, mid and small will perform better than near future? Sir, Sundar Raju, sir, our understanding is that there is a froth in the mid and small cap companies. It should come off. And that's one of the reasons we have invested in a good quality large cap. And despite investing in large cap, we did extremely well in the month of April. Am I right? So today, we don't want to take unwanted risk. And without taking risk, if we are able to do well, so be it. So today, almost 90% of our investment in large cap, and our definition of large cap is a company having more than 20,000 crore market cap. And that's what we have done, sir. So we do believe there is a froth and it has to come off. Rahul Kumar, can we again have a similar study on performance of exiting Mojo stock with benchmark once they lose Mojo stock? Is it been quite long? We used to get the study by Dr. Batra. So Rahul Kumar, sir, I think that data is available on our website. After exiting, I think वो नहीं मिल रहा है, बराबर, you are right. But you should ask this question to another Batra, Karan Batra, and I think he should present this data. Amir, एक काम कीजिए, please ask forward this question to Karan, and he should. So remember, a lot of people have little misconception that if the company loses its Mojo stock status, do we exit from the model portfolio? Answer is no. The company just become a hold. It does not become a sell, and hence many times you would see that a company which was a Mojo stock, we continue to hold. It loses Mojo stock status, but we continue to hold that company in the model portfolio. Why? Because still a hold is not an exit. But anyway, the data that you ask for, I think Karan can definitely present this data. It's not a challenge for him. It should not be a challenge for him. So I think Amir is saying बहुत हो गया आज के लिए. He's saying it's a weekend. In fact, he's more keen to watch IPL matches. So he said, sir, अभी बंद कर दो, IPL match दिखना है. So anyway, thanks a lot everyone taking time out. Enjoy your weekend. Of course, I'll be there in the office tomorrow because we have some work to take care of. But you please enjoy yourself. Enjoy IPL match. Enjoy good quality time with your family. Karan would be there in front of you on Monday. And again, I'll be back in with you on Tuesday with a Q&A with Sunil Damania. And of course, on next Friday, I'm doing an equity outlook. So please come for that equity outlook. I will be presenting some interesting data in front of you. With this, good night, take care. And one more thing, if there is an election in your constituency, please go and vote. Whichever candidate you like, whichever party you like, but please go and vote. I think that's what everyone should. You have been given the rights, please exercise the rights, and please do go out and vote. With this, thanks a lot. Have a good night, take care.